Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Welcome to Life Planning 101. My name is Angela Robinson with Smart Money Group and Kennedy Financial Services here in the great town of Eastland, Texas. I want to welcome everyone to the show this week. We have great information as always. One of the things that we really pride ourselves in doing is providing education, information, as much as we can to keep people informed, because I don't really believe you can make great educated decisions without some education or being able to trust a person or a group of people, group of professionals to be able to help you out. And we just really want to be able to bring that valuable information to the show each and every week. And today's no different. I was looking back this week with a friend kind of over this last 2 years, and we were just talking about our industry as a whole and how much it has changed. And after I got off that call, I really got to thinking, if we're sitting here 10 years from today and we're looking back at this period in history, we're going to go, wow, all that changed within a couple years. And it's not just a pandemic and a way of life and everything there, but I mean, we just reverted back to the 1980s, my friend, overnight. With inflation and interest rates and things we haven't seen in 40 years. People don't even know how to fathom what is really going on. And I think by the time that you do end up getting to a place that you can fathom what's going on, you're going to be sitting there shaking your head again. And, it's kind of like the joke, Social Security, when do you get it? 65? Well, I would say you don't really ever get it because it's so dang complicated. And yet they've done it to us again. And that is what we're going to focus on this week in the show is Social Security. This recent increase of a whopping 8.7% to everybody's benefits in 2023. That is awesome. That is great for people that are retired, mostly on a fixed income. It's amazing. I mean, number one, it's the largest increase in 41 years. Number two, it comes on top of a 5.9% increase for 2022. Wow, that's big. That can really make a difference in people's pocketbooks. But I do want to raise a level of awareness. Of course I do, right? Why would we even be talking about all this great news? It's like any other show you listen to. You get on to listen about what? Well, maybe you'll get on to listen about the negative, but that's what it sometimes is. And obviously, we want to point out the holes. We want to point out the gaps, the potential risks and everything. And this is one of them. Because someone else that's really excited about this recent increase with Social Security is Uncle Sam. I kid you not. So yes, it is great. 8.7% increase in 2023 comes on the heels of 5.9% increase in 2022. And Medicare premiums are actually going to drop a bit in 2023. I remember a few years ago, we were doing a show, we were talking about Medicare premiums actually getting a pretty good chunk in increase, and Social Security was getting nothing. So you ultimately had less in your pocket net when both of those things went through. And we're sitting in a time and day and age where it's completely different. We're in the reverse. Things are looking better for these Social Security recipients, which is awesome. Because I know when people retire, they go on Social Security, it's a scary time. And one of the things that's the most scary is the cost of living going up and you being on a fixed income. So to see these increases is huge. I was just running some numbers. Let's say that you had a couple that had $40,000 in Social Security benefits back in 2021. Okay. Well, that first 5.9% increase got their benefits to $42,360. So they got that $2,360 raise this year. Now, they're going to get another raise in 2023, and their benefits are going to go to $46,045.32. So virtually over a 2-year period, their benefits have increased by about $500 a month. That's awesome. That's really good. But again, beware, because this may not be as good as you think it is. And the reason is Uncle Sam's excited about this too. And that is what we're going to talk about when we come back on Life Planning 101. You're not going to want to miss it. Welcome back to Life Planning 101. My name is Angela Robinson with Kennedy Financial Services and Smart Money Group out of the great town of Eastland, Texas. And it is close to Halloween, right? So you want to teach your kids about taxes and Social Security. All you have to do is just take away about 30% of their Halloween candy, and you can promise that you'll give it back to them, or at least part of it back in 70 years. Yes, bad joke. I know. But in reality, that's kind of what it is. You finally get to the age that you can take your Social Security benefits and you get really excited to take them because you've been paying into that dang system for so long. You finally get to reap the rewards. And, I do know when we do Social Security planning, everybody asks about when they should take benefits, usually starting at the age of 62. And usually that's not the wisest time to take them. In fact, we've done a whole show on that. If you want to go back and listen to that, it's a great show about when you should take your Social Security benefits. But that's really not what we're talking about here today. The fact that we're talking about is that, yes, you have these benefits and you even have more of them because Social Security has just given 2 raises. In 2022, they gave a 5.9% raise. In 2023, they gave an 8.7% raise. We did kind of an illustration before the break to show that, that was really the equivalent of about $500 a month over 2 years for a couple that was receiving $40,000 a year of benefits. That's huge. And then Medicare premiums on top of that are actually dropping, which is a switch from earlier in the decade, at the end of the last decade, right? So what do you need to be worried about? Why are we even having this show? And I mentioned before the break that Uncle Sam's kind of excited about this whole situation as well. And here's why. So you may or may not even realize that your Social Security benefits can be taxed or might be being taxed right now, and they can actually cause your other income to be taxed even more. And you may be thinking, well, I already paid into Social Security all that time. It was a tax. Why do I have to pay tax on my benefits? Well, you can thank 2 administrations for that. See, it actually goes back all the way to the Reagan administration in the 80s. And then Clinton added on to that. So in the 80s, Reagan, they instituted that up to 50% of your benefits could be taxed. Now, there's a very complex little formula to determine what actually makes those taxable, what is the tax on those benefits. Of course, nothing in Washington comes out with simplicity. We know this, and so why should this be any different? And therein lies the bad joke about get it, Social Security, you will at 65. No, I don't know that most people ever really get Social Security because it is so dang complicated about when to file, how to file, who to file. And then you have the taxation that can add levels and levels and levels and levels of complexity to it, from early benefits, waiting for benefits, and then just overall taxation, which is what we're talking about today. So, yes, that was the first threshold, that up to 50% of your benefits could be taxable. And the threshold for that is over $25,000 of this adjusted income formula that they give us. If you're a couple, you get over $32,000. Then we had another threshold added on top of this by the Clinton administration. Okay. And they said, now, okay, up to 50% over that $32,000 for a married couple, but let's tax up to 85% of those benefits for someone with over $44,000, or if you're single, $34,000, right? So these aren't really big thresholds. And to add pain to misery, unlike the increase with the Social Security that you just saw, which is virtually, I guess about 14% plus over the last 2 years, these thresholds have never moved. They've never been adjusted for inflation, and they're quite low. It's kind of the low-hanging fruit in the tax tree. I mean, here's two. There's a Reagan administration and Clinton administration, right? You got both sides of the aisle here doing this. The thresholds haven't moved. I would say that no one's really paying attention, probably because of the complexity to this. And so it's not just this high political area. So it's a great way for them to be able to try to recoup some of this Social Security income that they're going to have to pay out, which, oh, by the way, the reserves are running out. We all know that. So it's no surprise. It's no surprise that this is happening. So why does this all matter to you? Well, here's the deal, is that when you actually receive your Social Security benefits, they're going to look at your overall income without your Social Security benefits, and then they're going to add in half of your Social Security benefits to that overall income. And then they're going to take what your tax exempt interest, things that you don't pay, or the tax or exempt interest that you don't pay tax on, and they're going to add that. So there's these three components that they determine how much of your Social Security income is taxable. And they add those together. And once they have those, wherever you fall in those thresholds determines how much of your Social Security is taxable. So you got this increase, this couple, they're making $6,000 more over a 2-year period of time. Are the taxes going to stay the same, go up, or go down? Yep. If you said up, you're right. Their taxes are going to go up. Now, there's a lot of people that don't have withholding taken out of their Social Security checks. There's a lot of people that do a lot of other taxable things throughout the year, such as take money out of an IRA, maybe even converting IRA dollars to Roth IRA dollars. And you've had this little plan you've been doing for the last few years, and it's working out all fine and dandy. And then, boom, you find out a little too late, you got a problem. You got a problem because your Social Security income just went up, pretty much equivalent of 15% over the last 2 years. And your tax withholding hasn't gone up. And oh, by the way, it caused some other things to be more taxable. What am I talking about? Well, when we come back on Life Planning 101, I'm going to walk you through a few scenarios because I think this is really important for people to understand, number one. And number two, to make sure that you are giving yourself ample time to get with the tax professionals so you don't have this bomb, so to speak, hit you all at once. Join us when we come back on Life Planning 101. Welcome back to Life Planning 101. My name is Angela Robinson with Smart Money Group and Kennedy Financial Services, and we are talking all things Social Security increases for you and for Uncle Sam. Because yes, you are getting an increase. There is no doubt if you're receiving your benefits. In fact, you've got a pretty nice one over the last 2 years. But yes, Uncle Sam may get a piece of that because whether you realize it or not, a portion of your Social Security benefits could be taxed. Might already being taxed and maybe even taxed more and cause your other income to be taxed more. So what are we talking about? What does that really mean? So let's just imagine that you are taking money out of your IRA or have been, and or you are taking money out of your IRA to convert to a Roth IRA. And you've been doing this for the last couple of years. Well, I assume that if you have, that y'all have done some pretty good calculations on how much that should be and what it should be to stay within certain taxable thresholds. Well, the reality is if you start breaking into these limits of where your Social Security income is taxed, doing a Roth conversion or taking money out of your IRA at the same time of more of your Social Security benefits to be taxed kind of acts as a double taxation in a sense because both of the items start to become taxed more. And a lot of people don't really understand this. Say, well, I'm just in the 12% bracket. Well, yeah, you're in the 12% bracket, but if you do that and it forces you to surpass a threshold or, increase, then what's going to end up happening is more of your Social Security income's taxed on top of that. So now, rather than just paying a 12% tax on that conversion, you could be paying a 12% tax on the conversion, plus you're paying a 12% tax on Social Security income that otherwise would not have been taxed. So this is a big deal. It really is kind of something hidden that you don't understand the way it works and the way it should work without doing a little bit of research, right? So let's say that you've been doing that or you keep doing what you're doing and you think, oh, I really don't need to pay attention to it. Well, you might get a really nasty surprise for 2023 or even 2022, because remember, you haven't filed your taxes on the first 5.9% increase. So even if you have income that is set in stone, let's say that that doesn't apply to you, make sure you're withholding enough as well, because you may not get to keep what you think you're going to get to keep from all these cost of living increases. And if you're just spending it as soon as you're getting it, you could come up with a little nasty surprise on that. I know there's a lot of people that are late tax filers, and maybe you are a late tax filer because you need to be, maybe you want to be, maybe you should be a late tax filer. And if you don't know what I'm talking about there's another question for your accountant. But no matter the situation, if you're a late tax filer and you file your 2022 next October, and you're already into October for 2023, what could happen is that you have a big old tax bill that you have to pay in for 2022, and you've got to make catch-up estimated payments for 2023. This is some big stuff here. So what is the bottom line? The bottom line is you don't need to be doing this job alone. I always find it interesting with government benefits, social benefits. They're some of the hardest things to understand. It doesn't matter. It doesn't matter if it's Social Security, Medicare, Medicaid, disability, whatever it is. They are some of the hardest thing to understand. They have the most difficult, intense rules. Well, if this, then if this, and it really boils down to, it's like shopping at Walmart for a set of depends, because it depends on everything. Everything depends on everything. And so it's a very complicated system. So a lot of people that rely on government benefits are at the mercy of what they know. And the problem with that is you don't know what you don't know, and that could be the one thing that ends up hurting you. So I would encourage you, we've got these changes, and what I haven't talked about is the changes that are on the docket to come, because it's 2022, my friends. 2026 is right around the corner. Now, why is that an important landmark, should I say? Well, that's when the current tax reform sunsets, okay? So everything goes back to the way it once was. Well, what does that necessarily mean? It depends. It depends on your situation. It could mean you pay less taxes. It could mean you pay more taxes. For most people, it's going to be the latter. You're going to be paying more taxes. So just because you have these nasty little surprises this year and next year, and you think, oh, I don't want to pay that, it really may be the best decision that you need to make to pay it. For example, you may need to do those Roth conversions. Number one, the market is down. Hello, that's like a free lunch. When the market's down 20% and it has to come back, almost double that to get back to just where it was, you're getting to convert IRA dollars to Roth IRA dollars at a huge discount. And oftentimes that well surpasses what any taxation would do on that. So you have to look at that. And in effect, you also have to look down the road. Are you going to be subject to a ticking tax bomb when you turn 70? So now we have all this Social Security, I say 70, 72. So now you have all this Social Security income. It's increasing. You have your other income possibly that you have, and then you have what's called required minimum distributions, and it starts to hit all your tax all at once. We have seen, probably the worst one we saw was an increase of about $44,000 a year in taxes, pre-RMDH, post-RMDH. Yeah, that's ugly, guys. It's very ugly. So the biggest thing is that you're doing some planning, and you're not just looking at what's happening to me in 2022, what's happening to me in 2023. You're asking, okay, let's look at my retirement, because I'm going to tell you this. You can get your money managed for retirement, make sure you've got a great retirement income plan in place. You can make sure that you have all your legal documents in place, and you've got a great healthcare plan in place, and you've got a great long-term healthcare plan in place, and you've taken care of your surviving spouse if something happens to you, and you have all these plans in place. But if you ignored taxes and you ignored the prospect of taxes going up in the future, ouch. Yes, I gave you some crickets there because I really want you to think about that. Our spending has been what in this country? up or down? And the number of people has been what in this country? Up or down? So the amount of revenue coming in is not matching the amount of expenses going out. So the only thing to do is increase the rate over time. Now, that's not a guarantee that taxes are going up. Obviously, we can't make those kind of assumptions, and I certainly don't want to be compared to a weatherman or economist. But the reality is that simple math for most of us, and the prospect of it is probably higher than not. So are you planning for it? Are you looking at it? And that's really important. So bottom line, get with your tax professional to know where you're going to land for the next couple years. Get with your tax planner, which, by the way, they may not be the same people. Oftentimes they're not. We work in tandem with the team. We have Briscoe and Associates, our sister firm, tax and accounting firm, that helps us with all of those tax professional recommendations. And we're thinking outside the box. What if? And that's really important to have that team of professionals that's working for you to be able to do that, to help you have the most successful retirement from a tax perspective that you can. So, and this really goes throughout your life. Yes, today was all about Social Security, all about retirement. But reality is that you need to be setting yourself up for success no matter what age you are. So with that being said, my name is Angela Robinson with Kennedy Financial Services and Smart Money Group. Thank you for listening to our show, Life Planning 101. We hope that you really find it valuable. Make sure you're joining in on Fridays. We've got the quick market minute that's happening with Black and White Market Chatter with Aaron Kennedy and Matt Irvin, and they do an incredible job, especially through these turbulent times. You're not going to want to miss that. And you can always visit us on our website at www.kennedy-financial.com. Thank you again for listening to Life Planning 101. God bless you, and join us every week for new and relevant information to help you live life on purpose.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Don't forget to learn how our sister company can assist you with all of your tax, bookkeeping, and consulting needs. You can find out more at briscoeandassociates.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.